If you are near retirement and you have a 401k, or maybe you've already retired and you're getting ready to figure out what to do with the 401k, you might want to watch this, because I just talked to a client this week and it was interesting on their complaint to me about the 401k company and what was going on. They were telling me that the 401k advisor they were assigned was telling them that they needed to be a 50-50 allocation. So 50% stocks, 50% bonds based on their age. They needed to make sure that they were pulling some off of the table and being more conservative. What they didn't know, though, was that the client actually had a whole nother bucket of money that was short-term money, and that the 401k wasn't going to be something they were pulling from in the near future. So going really conservative was actually going to hurt that client's long-term trajectory when it came to the retirement plan. And maybe that's something you've experienced, maybe not, but you really want to make sure that you're working with somebody, whether it be at the 401k firm or another company, where they're able to help you and guide you on this. So let's go ahead and just walk through a few of the things that you really need to be thinking through with a 401k when you're getting close to the retirement years. And so the first one is something really cool, but unfortunately, it does not apply to every single 401k. The IRS allows the rule of 55. What that means is the year you turn 55, if you're retired, you're able to withdraw from your 401k without a 10% early withdrawal penalty. Now, I say, you have to turn 55 that year that you retire, though. If you retire at age 54 and that year you're not going to turn 55 that year, you've already turned 54, you don't turn 55 till the next year, guess what? That doesn't apply to you. So you have to turn 55 in the year that you are retiring for that to apply. And with this, though, there's a little bit of a catch, because a lot of people think, okay, I'm able to, cherry pick what I'm pulling from, or create some buckets within my 401k to say, all right, I'm going to pull, let's just say you have 70% stocks, 30% bonds. Well, the stocks are down. I'm going to pull from the bonds. Well, unfortunately, that doesn't work. That's not what's going to be able to usually happen. Instead, oftentimes with a 401k, you have to equally pull from each of the funds weightings in the 401k. So if the stock market's down and the bonds are up, the whole sell high, buy low kind of concept, you're not able to always do that. So that's a drawback there. So just be careful and make sure that you understand how the rule of 55 works, and ask if it's going to work for you if you're planning to retire early. What else you can do with a 401k? You could leave the whole 401k at the company. You could do a full withdrawal. I never would suggest doing this, though, because if you do a full withdrawal and you just take the money and you take possession of all of it, and I've heard of some people that get really angry and they just say, hey, I'm going to do this. If you do that, then you are going to have tax liability on all of that money. Now, hopefully you've got a little bit of Roth money in there so you don't have to pay taxes on everything, but please don't do that. A partial 401k rollover, a lot of times this is a great option depending on, if you are 55 and you're not quite where you can access all of an IRA yet, maybe you do a partial rollover, and then the full 401k rollover. So let's go ahead and let's kind of take a look at each of these and kind of take a look at some of the breakdowns. So if you leave the 401k, I would say you must have an advisor that you're very comfortable with, that knows your entire financial picture. If you have it at the 401k company, goes back to the story I was just sharing with you, because if not, then how are you getting advised on this? Now, also, if you're doing it on your own and you're wanting to self-direct everything, why would you leave it in this 401k? Because, you're going to be tied with potential fees there. You're going to have, limited options. There's a lot that goes on there. So even if you're looking at doing it on your own, look to maybe get it out of that 401k. Again, considering fees. So with the fees on a 401k, this is where it gets really tricky, because not everything is super transparent with 401ks. Oftentimes they have mutual funds within the 401k. Well, mutual funds have expense fees on the backside that you don't see actually come out of your account, but it's something that's getting passed along to you. And basically you get the net return on whatever fund you are in. And so there's that fee. There's sometimes administration fees. Sometimes there's advisory fees. And some companies have cut a lot of those fees out, but it's just something to be conscious of and make sure that you're aware of when you're thinking through, hey, am I going to keep this 401k or not? Again, considering investment and options. So as I just mentioned, there's a plethora of things that you can invest in if you were to roll that over, whether it be with an advisor or if you're doing it all on your own, versus the 401k is generally very limited. There are companies that are offering things now called brokerage link, like Fidelity does this and a few others do that, where you can actually take your money and put it into a different platform so that you can pick and choose what you're investing in. What I have seen as a limitation there with that, though, is that even with a lot of what we have and what we're working with, we oftentimes still have to invest in mutual funds within the Fidelity platform. So it's not something that we can just go and buy an individual stock and build out a custom portfolio for. And then considering the limitations on strategies, such as the buckets, like what I talked about a minute ago, that's a downfall there. And then really just figuring out also conversions, because when you go to convert the money with a Roth IRA, there's just a little bit more of a hang up and a lot more of a process oftentimes the 401k, because generally it's not built to be doing things like Roth conversions. Instead, you're going to have to possibly call in there and wait on hold. Just today, we called a 401k company. I won't specifically mention the name, but I will say that we spoke with someone first after about a 30-minute wait. And it was very difficult to understand them. And then they transferred us to somebody else, and they transferred to somebody else. And then after 47 minutes of a call, we ended up finding out with the client that they had to get some paperwork done to do the rollover, but nobody knew the process the entire way through. And every single person that we got passed to was supposed to be the person that we talked to. And so it can be really challenging and it's difficult. So I really wanted to teach on this to help you to understand what you could do. The partial 401k, as I mentioned, this is a great option if you are going under the rule of 55. So basically, you can say, okay, I'm going to build out a conservative portfolio that's going to last me for 5 years that I'm going to be pulling from in my 401k during the retirement years if you're doing an early retirement. And then from there, the rest of that money can be rolled over to an IRA to have a lot more options as far as investments go. And you've got a lot of strategies that you can work off of there. And then finally, you've got the 401k rollover itself. If you just do the full 401k rollover. Now, remember, if you're 59 and a half and older, great, go for it. But if you're under 59 and a half and you do that rule of 55, please don't do that. Please make sure that you're getting advised properly so that you don't lock this money up. There is something called the rule of 72T. If you have an accident where you do mess up and you transfer it all to an IRA, there are some options around that. Or you could even go back to work for a little while, as long as the company you're going to work with allows a rollover in or a transfer in from your IRA to your 401k. That's an option as well, just to get it back in there to try to qualify for that rule of 55. But with the full 401k rollover, you're also going to want to consider the fees of where it's going. I wouldn't be a fiduciary advisor if I wasn't telling you that, because you do want to understand, hey, if the 401k doesn't charge much of a fee, how much am I going to be paying this advisor? And is it worth it to me with the services that I'm getting to work with another advisor if you're not doing it on your own? And just understanding that oftentimes the 401k rolled into an IRA is going to create a lot more flexibility. Now, those are a ton of different things with the 401k. You might have thought of something that I hadn't mentioned here. I'd love for you to list that down in the comments to let other people know maybe some other things they should be thinking about.